when the ATO stops you at the border. Welcome to IO Insolvency Options with Darren Vardy, the Managing Director of Insolvency Options and a registered liquidator with over 30 years of experience helping businesses and individuals navigate financial challenges. In today's episode, Darren explores the ATO's Firmer Action Program and reveals how serial tax offenders can lose their right to travel. He explains the critical importance of proactive engagement to avoid extreme enforcement measures. You'll learn about Departure Prohibition Orders, the triggers for firmer ATO action, and how to navigate financial hardship through formal restructuring. I'm your co-host Anthony Pearl. Let's dive into unlocking more about insolvency options. Well, Darren, hello and welcome to another episode of the podcast. And I guess this is a really interesting topic that we're going to cover today, all about the tax dodgers not being allowed to use their passports. I think that's probably an important thing for people to know exists.
Look, yeah, it is. It's a mechanism that's available to the ATO where there are, for want of a better term, serial offenders with non-payment and/or reporting of taxation obligations.
Yeah, and it's interesting that you say that it's open to them. You kind of, I guess, as general public, you almost think like, well, isn't there a point fairly quickly where that should just be standard?
The tax office needs to conduct themselves as model litigants and as a reasonable party in pursuing the debts. And they have a program called the Firmer Action Program, and that deals with them pursuing outstanding debts, non-lodgement, non-compliance activities of business owners. And there are a couple of things for the ATO to get to that level where they are issuing DPOs, Departure Prohibition Orders. These parties who have received those have clearly not engaged with the ATO as they should. And, you know, this Firmer Action Program, there are quite a number of other steps that the ATO will go through to try and elicit engagement from the business owner. And generally with their Firmer Action Program, it occurs when, you know, the business owner refuses to engage with the ATO, they ignore any text messages, SMS messages rather, or any reminder letters. Where there's repeated default on agreed payment plans is obviously another trigger. And we find that that's happening more often of late with the cash flow squeeze that small businesses are experiencing. And the ATO are trying to corral a business owner to a position where they're actually looking to resolve their financial position and help manage their debt. Another concern for the ATO is when these business owners may have been subject to an audit and it's been detected that there's been deliberate avoidance or ongoing payment avoidance continues. Another thing is illegal Phoenix activities. So the ATO has quite a number of areas and issues that they concern themselves with before they actually look to enforce this Firmer Action Program. And before getting to, you know, a Departure Prohibition Order, what we're finding is that the ATO will generally have issued a garnishee notice. They may have issued a director penalty notice, and they also may have disclosed to credit reporting bureaus the business's tax debt. So generally, there's a lot of early steps that have been taken by the ATO for which hasn't resulted in action by the business owner. In addition to Departure Prohibition Orders, we've also seen directions to pay superannuation guarantee charge, which is the SGC, and which also falls under the director penalty notice regime as well. But we've also seen freezing orders. And from time to time, the ATO will, in fact, approach the Supreme or Federal Court for an order to temporarily prevent the taxpayer or third parties from disposing of any assets, you know, selling, moving or encumbering any assets where there actually has been evidence of avoidance of payment of the tax debt. So this isn't something that the tax office goes straight to. They need to go through a process to try and engage and try and have the taxpayer come to the table to deal with the financial issue. But when they are, for want of a better term, stonewalled, it leaves them with very few options. And quite often, a Departure Prohibition Order, a freezing order, will get the interest of the relevant taxpayer to deal with their issues.
I mean, there must be nothing worse than from an employee point of view that you've got unpaid superannuation, for example, and your boss is off jointing overseas. So, you can understand why that kind of action sometimes needed.
Absolutely. The employee superannuation is part of a condition of employment. It is afforded a priority under the Corporations Act, whereby from the recovery of assets, generally, employee super is the first cab off the rank that gets paid before annual leave, long service leave, before redundancy. So it, as well as any unpaid wages, are afforded the top priority for repayment out of the recovery of assets in a liquidation. And quite often, when a business suffers financial hardship, those who scream the most generally get paid. And it's quite often the suppliers that are knocking on the door. But it's not the super funds that render an invoice to seek to get paid, and nor does the ATO for their PAYG GST obligations. So where it's for want of a better term, a proactive obligation to pay, as opposed to someone pursuing the payment, they quite often get shelved to a later date for payment, and quite often that later date may never arrive. So what we're finding is that whilst under the director penalty regime, directors can be made personally liable for outstanding super, that has been a good mechanism for directors to ensure that their super is paid as best as possible and on time. But what we also have coming into play come 1 July 2026 is an actual change to the superannuation regime, and it's what's called payday super.
I mean, I think before we get into that, and I know we're going to address that in a coming episode as well, is talk me through the process though for before the ATO actually gets really to this point where they're saying, right, we're stopping you at the border kind of deal, because it's not that many in the grand scheme of things, is it? I mean, it's not like there's hundreds of people every week that are having their passports taken away. This is an end course kind of action where it's got quite serious.
And it is quite serious. And as I indicated earlier, generally there has been an elapse of a significant amount of time for which the ATO has attempted to contact the taxpayer. They have been ignored. Quite often, as you would expect, there is a significant amount of money outstanding that is being pursued. And it's where there may be some evidence of the company ceasing to trade, but a new company of a similar name operating the same business by the same directors is now in existence and continuing to trade into the future. And you are really dealing with the recalcitrant taxpayer, the worst of the worst. And when we talk about the Departure Prohibition Orders, my experience in having looked at those that have actually been issued, there is a serious level of non-compliance and a significant debt outstanding, for which also rolls into the public interest issue or public interest piece, that the ATO must act and uses the powers available to issue the departure preservation orders.
And I imagine, Darren, that this is the kind of space that you find yourself in, from your point of view, that it's when things get to this kind of desperate stage sometimes, and that's when people act, whereas they probably should have been acting a lot earlier than this before it gets to this point in time. And it's those that are not doing anything that are finding themselves in this situation.
Most definitely. Most definitely. But generally, this isn't the mum and dad small business. These taxpayers that are subject to such, what we would say is such harsh action by the ATO. I think whilst from the face of it, it looks harsh, but given the conduct and what the ATO has in fact gone through previously, their action is justified. Absolutely.
And typically these kinds of people are going to be finding themselves that where the company that they had accrued this debt on is insolvent, no longer trading. Is that typically where you're going to find these people?
Absolutely. And they may still be trading, but they may not be trading in the entity that has incurred the significant debt which is outstanding. And that's where we look at the illegal phoenixing. And the ATO has a lot of intelligence at their disposal to track directors, track operations, track employees through various entities to enable them to determine what is going on forensically to get to the position of taking this extreme action.
And, as you kind of alluded to, I imagine that many of these people in this situation, it's not just the ATO that they're probably money to. So the ATO may be the one that's taking action. Where does that leave the other people that may be owed money?
Well, generally, the others that are owed money end up being creditors of the company that ultimately goes into external administration.
And so does the ATO get priority in those kinds of circumstances?
No, they don't. The ATO is an unsecured creditor, akin to trade creditors and suppliers when a company goes into external administration.
So I guess on the other side of things, I'm just interested as well that if for some reason you're listening to this and you're finding yourself in this situation where things are accruing and, well, hopefully you've not received one of these notices, because I imagine that if you get a notice like this from the ATO that you're probably consulting a lawyer immediately. But what is the course of action that if people thinking they're going down could end up in this path? What should they be doing?
Yeah, look, the ATO Firmer Action Program is all about taxpayer engagement. So when you ask the question as to what taxpayers should do, what business owners should do, we look at the reasons why the tax office take the action that they do. And looking at that is taxpayers, business owners, they should engage and should proactively engage with the ATO. If they find that they're in a financial hardship situation, they shouldn't simply sit back and, with all due respect, bury their head in the sand and not respond to reminder letters. Because by them not acting and responding to the various letters and communication from the ATO has only one thing in mind, and that is, well, why are you not responding? You must be hiding or doing something untoward. So it's always better to be proactive with the ATO, explain the financial position. And believe it or not, the ATO actually want to help small business. And there are various mechanisms through small business restructure, through a voluntary administration and deed of company arrangement, where the ATO are able to support the restructure of a business formally. And they will be relying upon that to occur for the support. But it all starts with engagement and communication.
Yeah, I think communication is the key here, isn't it? Because as you called it, burying your head in the sand, you're in for a lot of pain. And it's interesting what you say about the ATO wanting to work with them as well. I mean, I think that's an important point, isn't it? That it's better to stick your hand up earlier on in the piece and see if you can come to some sort of an arrangement rather than just hoping.
Correct. And we've spoken about this previously, where the first thing is the taxpayer, the business owner, acknowledging that they've got an issue and then seeking out the right advice. And generally the company's external accountant is the first port of call, or their lawyer is the first port of call. And it's from there where referrals to a specialist insolvency practitioner occurs. And the earlier that happens, or the earlier in the stage of hardship that happens, we quite find that the more likely it is that any restructuring activity will be successful, because you have engagement with the various stakeholders for that turnaround and or restructure. So when matters are left for a period of time and the ATO is in advanced stages of their firmer action program in attempts to recover the debt, that's when the likelihood of them supporting the business becomes far less.
And just to wrap up this discussion, Darren, I just wanting to ask, I mean, this kind of course of action, is it a sign that the ATO is trying to be a little bit stronger, probably, I would say, post-COVID, when there is some leniency over a period of time, particularly to small business? Is this part of them toughening things up and trying to really make sure that people are doing the right thing?
I think what it is, it's when we talk COVID, COVID was an unprecedented era of our time. And the implementation of the programs during COVID required businesses to continue to trade. They required the business owners receiving the funds and paying them out to the employees in the ordinary course. Businesses were used as a mechanism to get money to the people, to those who needed it, to support the economy. That's what it was for now. But for COVID, there was probably quite a number of businesses that were on the threshold of hardship at the time COVID came around. And during the COVID period, they probably only maintained operations to enable the facilitation of getting money to the people that needed it. What we're finding is that a lot of business owners have come out of the COVID period with a not dissimilar debt that existed at the time that COVID came about. But because of the COVID era, pandemic era, they never had ability to deal with how we fix the financial position of our business to move forward. We're now a number of years post-COVID. And what we're finding is that some people have successfully managed to get back on top of their liabilities and get their businesses working again. Others have managed to maintain a same level but not make any indent into the historical debt that was there. And others are in a situation where the debt has, in fact, increased and continued to accrue. So they're the sort of three types of businesses that we're seeing at the moment. And those where the debt hasn't increased, where they've managed to maintain, we're finding that they're the ones that have the ability to restructure their operations, to save some costs, to really quarantine that old debt and restructure that to move forward. Whereas those that are continuing to operate, continuing to accrue debt, we're finding that they are the ones that are ultimately ending up going into liquidation with no recovery at all.
And that's all we have time for in this episode, but next time on IO Insolvency Options, we're going to be sounding the alarm for small business owners as we look at the massive changes coming to payroll and superannuation. Darren's going to break down the impact of these new regulations starting the 1st of July and explain why these shifts could lead more businesses to face financial hardship if they aren't prepared. It's definitely a critical conversation that you can't afford to miss, so make sure you're subscribed. To help you navigate the topics we discussed today, of course, we have a workbook that's available based on the episode. It includes a number of questions that you can answer, as well as key quotes and an action plan to assist you. You can download your copy via the link in the show notes. For details on how to get in touch with Darren and his team on insolvency challenges, please consult the show notes. The podcast is produced by my team at podcastdoneforyou.com.au, helping professionals share their expertise through powerful podcast content. If you found value in today's episode, please like, comment, share, and subscribe so you never miss an episode of IO Insolvency Options. Until next time, remember, there's always a way forward when you know your options.